we've got a microstructure spread of all four major equities. When a roll period occurs, we have what's called bifurcation very often, and it can even be seen in the microstructure like we saw today. Bifurcation meaning that asset classes that typically correlate in a very streamlined fashion are now actually diverging in a lot more strange patterns than you would typically see. And again, this is due to the split in volume. On my current optics, I've got the H contract on the S&P trading at 587,000, while the Z contract is at 276,000. So just under a million is a pretty typical number for the S&P to trade. So at this hour, it usually will get to a million in the next hour or so. So what you're going to see now is you're going to see the split where, some day traders, some positions might still be maneuvering through the Z contract while people roll into the H contract. But nonetheless, when you have your ladders up, try to look at, I know it's a lot of space to find, but try and look at the Z and the H, despite the roll period or whatever roll period it is. Make sure you look at the front and the back. So the trade in question today is on the Russell. And sorry, I just don't have my pen on this PC yet. I need to download it, but hopefully you can see my mouse. So where I'm hovering here on the bottom left is Russell. So the trade that we took in question today is essentially this move down on Russell. So when you get the first initial cash open blip up, basically all of the optics on Russell's broad weighting were showing weakness this morning before the actual majors started to show weakness, like the Amazon, the Apples, the Facebooks, the Googles, well, the Meta, whatever. One thing I forgot to grab for you guys was the optics of the broader weighting charts. So like right now, the important part is to understand the bifurcation. The way I spot the bifurcation is not immediate today, meaning I don't just open up my charts and look at everything and go, yeah, the Russell looks like a good sell. I've been monitoring the equity markets, the individual stocks within each indice over the last really month on the basis of, number one, we're at an extreme in price. Number two, we're about to approach a roll period that goes into a quiet holiday period. So there's a lot of nuances that you need to be aware of that can give you little day trades that are very good. So anyway, without further ado, let's just have a look at what that looks like. Let me just pop it out like this. So essentially, I first start to spot some liquidity to attack for the move down just prior to the cash session. I actually messed up the trade the first time, but I managed my risk very well and only gave up just over 12 ticks, which didn't stop me from taking the trade again. But just a little nuance here, guys. A reminder is, if there's no volume acceleration, the trade's going to be harder to get a nice immediate payout with. So sometimes something I've learned is, if you get into the trade just before the cash open, you're probably going to get blipped out. And those that are new, this is very important for you to know. Those that are not new, you know this very well. So I've learned my lesson on that front. I waited for the blip. Essentially, this again over here is the Z contract on the chart. This is the H contract. So the H contract is trading much higher than the Z contract. So I have the H contract chart elsewhere, but I'm choosing to show you the Z contract because the level in question was the 7870. That was the level I needed to see retested after this blip down and after this really poor low here. Once the market on the Z contract started to attack that 7870, that gave me enough conviction that when we're up at 1900s, that is just too high relative to arbitrary pricing. The spread is too wide between Z, and H on Russell. Also, everyone was like, oh my God, look at the Dow because of the China data, whatever. Okay, that's just another thing for me to go, okay, well, I'm going to use that decline on Dow, which is more closely correlated to the Russell, and I'm going to ignore Nas and S&P, which are holding their ranges on the upside, and I'm going to hit the weak market. Because again, through my observation over the last few weeks, the bifurcation on these equity markets, these mainly the indices, is notable, and there's a lot of strange opportunities here.